Good morning, everyone, and welcome to today's webinar, Fired Up for Finance, covering Rwanda's new partnership law. Thank you for taking time out and being here today. My name is Lise. I am a business development manager at Rwanda Finance, and I'm your moderator today. This breakfast webinar is bringing together policymakers, professionals from the financial ecosystem and the private sector to share their thoughts and experience on this new partnership law. The discussions will be around the competitiveness of the new law, its expected impact on the local economy, and the value proposition for the Kigali International Financial Centre, KIFC, in view of this new law. For our audience, as we go through this panel discussion, we'll be running a live Q&A, and all your questions will be answered towards the end of the webinar. So we have enabled our Ask a Question feature. So if you have any questions, just pop them in there. And if you miss anything, do not worry. We'll be posting a recording of this webinar on the KIFC YouTube channel. You are in for a treat. You're investing your time with us today. I hope you walk away understanding why this new partnership law is important, what it is, its benefits, and how can people like you in our audience today benefit from this partnership law. And really overall, how is it a game changer for Rwanda? So to give us insight on this topic, we have put together a wonderful panel of distinguished guests that will shed light on this topic. On my right is Richard Kayibanda. Richard Kayibanda is the Registrar General at Rwanda Development Board. Richard was a lecturer of law at University of Rwanda, a practicing lawyer and member of the Rwanda Bar Association and the East African Law Society. In his current position as the Registrar General, he's tasked with facilitating investment through developing and maintaining a world-class efficient business register. So we're really glad to have him here because in addition to his strong legal background, all the future partnerships to be registered in Rwanda are going to go through his office. Richard, thank you for joining us and welcome to this webinar. Perfect. Next to him, we have Julien Kavaruganda. Julien Kavaruganda is the founder and senior partner of K Solution and Partners, a law firm in Rwanda. Julien brings a unique perspective as a practicing lawyer at the Brussels Bar Association, and that's before joining the Rwanda Bar Association and becoming the current president of the Rwanda Bar Association. He's also the vice chairman of the Kigali International Arbitration Centre, a board member of the East African Law Society, and he has over 17 years of experience. So we're really in good hands here. Julien, it's a pleasure to have you here with us today. Welcome to this webinar. Thank you. Mercy. We have Mercy with us as well, Mercy Ndirangu. She's a manager in charge of tax services at PricewaterhouseCoopers Rwanda, so PwC Rwanda. She has over 10 years of experience in providing tax consulting services and has worked in Kenya prior to joining PwC Rwanda. Mercy brings a different perspective as a tax expert that's really going to help us understand what this partnership structures mean through a taxation lens. Mercy, you're most welcome to this webinar. It's a pleasure to have you here. And last but not least, we have Adelit Sabimana. Dr. Adelit Sabimana has 14 years of experience in banking, public finance management, and strategic consulting. He's the technical advisor to Rwanda Finance Limited, where he advises on policy orientation for the development of the Kigali International Financial Centre, KIFC. So he's actually part of the team that has been spearheading the legal reforms that you're seeing in our financial sector. And that includes the topic of the day, the partnership law. Prior to joining Rwanda Finance, Dr. Adelit was the economic advisor to the Minister of Finance and Economic Planning. He's been the chief internal auditor at Access Bank, a team leader at the Office of the Auditor General, and he has worked in the private sector in banking at Cogebanque and BPR. Dr. Adelit, it's a pleasure to have you here with us today. Welcome. All right, so without further ado, let's jump in. Dr. Adelit, I'd like to start with you, if you allow me. As we start off, I would like to get some context and hear it from the horse's mouth, if you will. As a person that's a part of the group that's been spearheading the legal reform efforts in our financial sector, why was the partnership law identified as a must-have for Rwanda to become a financial hub for local and international investment? Why was it identified as a must-have?
Yeah, thank you, Riz. So the Kigali International Financial Centre is an ecosystem having the industry, financial institutions, regulators, Central Bank of Rwanda, Capital Market Authority, RDB. Mm-hmm. Also, we have Rwanda Finance coordinating all those institutions in that ecosystem. So the partnership law has not yet in the jurisdictions. So Rwanda were missing opportunities. Investors were not able to structure their businesses as partnership. So this legal instrument is very familiar with international investors, especially in a fund structure. So we have now, business people, investors from every part of the world can come in Rwanda and structure their businesses as partnerships. Thank you.
Perfect. Thank you so much, Adelit, for painting that picture and giving us some context to get started with this discussion. So as you just explained, right, in Rwanda, prior to the introduction of this partnership law, companies were the default vehicle for doing business. And because of that, we've missed out on international business, and some of the companies that are currently in Rwanda that could have been better structured as partnerships are structured as companies. But help us understand, what is the difference between a company and a partnership?
Yeah, thank you, Riz, again for the question. So both company and the partnerships, they are investment vehicles, meaning they give a legal structure for business to structure their businesses using those vehicles. So then, what is the difference between the company and the partnership? So number one, we can look at it on management. So both companies and the partnerships are managed differently. Mm-hmm. So in a company, we have shareholders which mandate the board of directors to manage the business with a management team which is getting paid. For the partnership, the management, that is the general principle, is in the hands of partners. Mm-hmm. So you see, shareholders, then the partners, so shareholders, board, then the management. Mm-hmm. So in the partnerships, we don't have, for instance, the board. So the partners have in their hands the management of their business. Number two, decision taking. So as in the company, we have that hierarchy. So to take a decision, it can take too long. Mm-hmm. So as the partners, they have the business in their hands, so they own it, so they can take a decision, and it is quicker compared to companies. Last is the taxation. Mm-hmm. So the partnerships, we call them tax transparent bodies. So the taxation is done at partners level. While in the company, so we have, for instance, the income tax, the corporate income tax. So when the company do the accounting and the financials, so then the profit is taxed, then it distributes a dividend to shareholders. Also, the shareholders are taxed. So I think those are the main aspects we can look at, the difference between the company and the partnership. So then is the choice of investors to use either a company or a partnership as a vehicle. So to have that additional vehicle, two companies we think is very crucial. Thank you.
Thank you so much, Dr. Adelite. I'd like now to hear from Julien. Julien, as one of the founder of one of the most prominent law firms in Rwanda, I want to hear from you briefly, who's this partnership law? Who benefits from it? Who was it put in place for?
At the beginning, it's for private private equity fund, investors. But as lawyers and law firm, we also benefit from it. Our audit firm will also be one of the beneficiaries. In a way that when you incorporate an entity, you're having partners, you're having people having the same vision of working together to achieve a certain goal. As lawyers, we only had an entity, a legal entity existing was companies, either private companies or public companies. So that's the vehicle we have been using, as Dr. Adelite was saying. And now we have another opportunity that is partnership, meaning that we need now to have a board. We also need to have a managing partner or a managing director. We are being taxed on the level of the company, and then afterwards we have to pay dividend to the shareholders. So it's like a double taxation. So the tax transparency will be an added value for those entities, being private fund, being shareholders, or in a law firm, being lawyers. And the management existing for law firm is the one shareholders are also board members. They are managing the law firm, and at the same time, they are in the board and in the general meeting. So they will be having more flexibility in getting in the partnership and exiting, because you may have a partner who will want to exit because he's old, because he's now willing to play golf. So that is the opportunity they may have, and the partnership agreement between partners will be allowing them to move much more easier in and out. And the management will be also much easier, because the provision of the current law and partnership allow a lot of flexibility. You're the one in control. So wherever you decide in your agreement as partners will be the rules you will be following, which allow people to be in a way of deciding. They are in the driving seat. Compared to the companies where there is articles of association, there is a Companies Act that you have to follow the rules that are sometimes mandatory. So compliance is key, but the flexibility that is being given to partners is very interesting and is key. So lawyers will be helping law firm to be established in that way, and moving from one status, the current company, to partnership will be also possible, which we are waiting as lawyers, and I think auditors are doing the same. For private entity investors that are willing to come to Rwanda, it's also an opportunity, because even foreign entity registered elsewhere will be able to register in Rwanda with the current legal framework in place. So thank you.
Thank you so much, Julien. I hope, I'm aware that we have some lawyers, some other service providers in our audience, so I hope you heard what Julien said, and you know that you can benefit from this structure right now. And in fact, it might be a better structure for your companies. Thank you, Julien. Now I'm going to move on to Richard. Richard, as a custodian of the partnership law, please explain the process of registration of a partnership. And there's two things I want you to cover there. So how do I register a new partnership? But for some of the people that are in our audience, right, that are realizing that, okay, I was structured as a company, but now a partnership might be better for me. How do they go through the process of switching that company to a partnership?
Okay, thank you for the question. I guess I will build on what has been said by other panelists. The partnership structure is being introduced because of its advantages, some of which have been, or most of which have been mentioned by previous panelists. One of them being its flexibility. By flexibility, we mean that it is not subjected to these regulatory, huge and heavy regulatory requirements that you will find for companies. and many other advantages that have been mentioned, easy of management, seamless decision-making processes. So, because of those advantages, we expect a number of entities that were structured as companies because of lack of an adequate structure to change from companies to partnerships. So I will start with the registration of a new partnership. The process has also been made as easier as possible to keep in line with the other flexibility that we have talked about. You will find that in most or in some jurisdictions, they allow partnerships, especially general partnerships, to exist even without registration. So for us as Rwanda, and in light of the ongoing developments in a number of areas, fighting against money laundering, financing of terrorism, and ensuring that there is transparency, as well as availability of information that could be exchanged for a number of obligations that we have as a country. I would like to remind the audience that Rwanda is a member of the OECD Global Forum on tax transparency and exchange of information for tax purposes, and by virtue of Rwanda being a member of that organization, we have a number of obligations, among others, Rwanda being able to record some information and avail it once it is requested by another member of the OECD Global Forum. So it is in that perspective that we have made a choice to have all the partnerships registered. But keeping in mind that in some other jurisdictions, it is not mandatory to have the partnership registered, we have also made it as easy as possible. So the prospective partners will only need to have partnership agreement. As it has been mentioned earlier, most of the things will be left to the decision of partners, and they will be catered for in the partnership agreement. So one of the major requirements that they will have is a partnership agreement, and then once that is in place, signed by all prospective partners, then they will have to fill an application form where they will provide details about, among others, the name of the partnership, the details about partners, the capital contribution by partners, and some other details that are deemed necessary. Then once that application form is filled and the partnership agreement is there, then they will submit the application to the Registrar General, and it will be registered in not more than two days. As some people might be aware of, most of the businesses that we register, we are doing it online. So work is in progress to ensure that we have this also done online, to ensure that people do not have to leave their places of business, their offices, bringing physical files. So they will be able to register it online from wherever they are. But while we are doing that, we are upgrading our systems to accommodate this. We have made it possible for interested applicants to be able to register physically now. So they are able to bring their physical files and they would be processed. That is how new partnerships would be registered. For existing companies, the registration process will be the same, but they will have to meet a number of requirements. Among others, only private companies will be able to convert from the company structure to the partnership. That is, public companies will not be allowed to convert from company to partnership. And also private companies will only be able to convert to limited liability partnership. This is one of the three types of partnerships that we have. and I guess maybe we'll come back to those. But at this stage, I would say that it is only allowed to convert to that type, because as per the current law, it is only that type that has a separate legal personality. So they will have to meet a number of other substantive requirements, among others, the fact that all the existing shareholders will have to accept to become partners, and no new person will be allowed in, and they will have to be in good standing with the tax authorities. They will not have their assets that are pledged to creditors, or if they are pledged to creditors, they will have to get a non-objection from their creditors. So those are some of the requirements that they will have to meet. But we are working on a comprehensive set of instructions that the general public will be able to access in the short period possible. Yeah.
Thank you so much, Richard, for that explanation of the process of registering either a new partnership or turning an old company, so in this case a private company like you mentioned, into a partnership. If our viewers have any questions, just keep typing them in the chat box and we'll get to them towards the Q&A. I would like now to move to Mercy. As a person with your experience and expertise as a tax consultant, I know Adelit and the other panelists have touched on the tax efficiency of a partnership structure. But I would love to hear more on that taxation aspect of partnerships and really their impact to the development of KIFC.
Okay, thank you very much. When you look at taxation of partnerships, or even before we go there, the investors we are trying to attract are most likely already operating as partnerships in their home countries or in the jurisdictions where they are, yeah? So they're coming with an expectation of how the partnership should be taxed because they've experienced it in their home countries, yeah? So then that means from where we're seated as Rwanda, then it's upon us as a country to make sure that the taxation laws we put in place for partnerships are consistent with the taxation laws for partnerships in other jurisdictions. And this will make it very easy to transition from, if I'm coming from country X and this is the taxation I'm used to, then I come to Rwanda and the laws are consistent with what I've been used to, then it becomes very easy to open a partnership in the country. Yeah, and touching on what my colleagues have said, looking at the three forms of partnerships we have right now, the taxation is consistent. And I say it's consistent based on the draft laws that are being done. As we speak right now, the income tax law, the way it is at the moment, it had not provided for taxation of partnerships for the obvious reason that we didn't have it as a vehicle for registration of a business in Rwanda. But now that you have the partnership law in place, the government has very quickly then come in to update the current income tax law. And we've seen there's already a draft in place. And the way the draft is currently structured, then we're using, and my colleague here used the right phrase, tax transparency, yeah? The pass-through structure, where we are saying, yes, I have a partnership, but I'm not taxing the partnership itself, I'm taxing the partners themselves, whether individuals or body corporates in it, yeah? And that is what is happening in other jurisdictions. So should this law then pass the way it is drafted, and I believe it's going to pass the way it's drafted, then it means we've achieved the consistency that incoming investors would be interested in. And that evens the play field, so to speak, because if as a partnership I'm coming and I already know I'll be taxed the same way I'm taxed where I'm coming from, then that stops being an obstacle. And I have to start looking at the other softer aspects of, be it ease of doing business, which Rwanda is doing perfectly well, yeah. And also from a good practice perspective, we are known to be very neat. We do our things very neat. If something needs to be updated, it's updated in time, yeah. So I would say if we implement the law rightly, correctly, consistently, then that's going to put us in a very good position as far as competing with other jurisdictions for investors is concerned. And my colleague here already alluded to this. If like say, I work with an audit firm.
Mhm.
If I had the option of either registering as a partnership or as a limited company, of course you'd go for the partnership, because then we remove the second layer of taxation of the dividends. Yeah. So at the end of the day, it's going to be a cheaper and a neater way of running businesses. But I need to qualify this. Not all businesses, like my colleague said, qualify to be taxed under the partnership law. Your governance and your legal structure needs to allow for you to be registered as a partnership. But yes, if we do implement the current draft the way it is, then we're going to be doing what the other jurisdictions are doing, to mean then that would be competing favorably with other jurisdictions.
Thank you so much, Marcy,
Thank you,
for that answer, and also for highlighting really that the work that is being done in our current financial sector in Rwanda is bringing us to standard with other international financial centers. So the structures and the taxation that you're going to find in other taxation, in other jurisdictions, is the same thing that you're going to find here. I hope that's clear to our viewers. And we've now covered why the partnership law is important, what is it, we've touched on who can benefit from it, what does the process look like. But I would like now to dig a little bit deeper and get into the specifics of the law. I believe Richard and yourself, Marcy, have touched a bit on the different types of partnerships. There's the general partnership, the limited partnership, and the limited liability partnerships. So I would like us to touch a bit on each of those partnerships. What are the key features? What do they mean? And who can benefit from exactly those types of partnerships? And here I'll go back to you, Julien. If you can briefly speak about the general partnership. What should our audience know about the general partnership, and who exactly can use this partnership law, the general partnership?
Thank you. So for the general partnership, the first element as a lawyer we have to inform our panelists, our auditors, is the unlimited liability. So it's two persons who are willing to have a common project, not understanding that they may take the risk of having unlimited liability in their business when on a daily basis, or taking insurance as individual. So being two and knowing each other and willing to practice together, like lawyers or auditors, they can use that general partnership as a vehicle to begin their business. They can improve afterwards to go to a limited partnership, which will allow them to have an entity for doing business, and with maybe some investor coming in and then allowing them to have funding. Investors remaining protected by the limited liability, but as individuals are remaining as a general partnership, they can remain in control and driving seat as partners for their own business, but therefore they will be enjoying the flexibility of the new partnership law, put in place a partnership agreement that will be driving whatever they are doing together. You need for that to be minimum two, you need to be individuals, and that is the entry point of the partnership agreement. So people beginning to do business together can use that vehicle. That's what, as a lawyer, we'll be advising to begin the process and the long journey of their investment. If they want, if it is a bigger investment, a bigger project, then they can move forward for either a limited partnership or a limited liability partnership, which is a different structure. I don't know if I will be the one explaining that one, or if other panelists, depend of you as our boss and moderator, the timing you will be giving us. But there is also the structure of a foreign entity, as Mercy was saying, somebody having already an established a partnership in another jurisdiction will be able to register in Rwanda and benefit for our current law. So you don't need, therefore you will be registering your own foreign existing partnership and then register it in our jurisdiction in Rwanda. So that is for maybe investors attracted by the current legal framework that is established that are willing to benefit from those advantages. But for somebody who wants to begin business or who was doing it alone and he's finding another individual, another partner who is willing to do the same, to have a common vision, the general partnership will be the beginning of the journey. And now we have a legal framework to allow them to do so.
Thank you so much, Julien. I would now pivot to you, Richard. If you can speak briefly about the limited partnership and what it entails, and please let us know how is it different from the general partnership.
Thank you. As Julien said, the basic and the traditional type of partnership is the general partnership. That is, whenever people doing business, business should here be understood in a broad sense of it, to include also professional services provision. So whenever someone moves from doing business alone, and there are two, then there we have a general partnership with the features that Julien has clearly indicated that I don't want to go back into. And then from that, you can move to a limited partnership, even if it is not a progressive approach. You can start as a limited partnership, as you can start as a general partnership and be able to convert to a limited partnership. So the difference, the limited partnership is a partnership where you have two categories of partners: general partners and limited partners. General partners being those that are entitled to participate in the general management, the daily running of the partnership. And limited partners, who are those investors who have got their money to invest, but maybe do not have the expertise to run the specific business of the partnership, or do not have time for that, and all they want, all they are interested in is to invest money and be able to get the return on their investment. And these limited partnership, these limited partners in a limited partnership have limited liability, as opposed to general partners who, as Julien mentioned, in a general partnership have the same status as general partners in a limited partnership. That is, they have unlimited liability for the debts and obligations of the partnership, but with that, they also have the right to participate in the management, the daily running of the partnership. While limited partners only invest money in the partnership, and they do not have the right to participate in the day management of the partnership. But that comes with advantages that they are not liable beyond what they have contributed to the partnership. But if a limited partner decides to participate in the management of the partnership, they lose this status. They become, as per the law, they become general partners, and their liability changes to be the same as for the general partners. However, understandably, these are people who have, as I have said, who have invested money in the partnership, and they would need some minimum level of oversight of how the business of the partnership is being run. And the law, the Rwandan law, as most laws in countries that are known to have better partnership laws, limited partnership laws, our law has done the same and has provided for a certain number of activities that limited partners can do, and these are not considered as participating in the management of the partnership. And this is commonly known as safe harbor provisions. That is, to have a law that makes it clear that if you do this, then this is part of your rights of having minimum oversight, a minimum look into the business of the partnership, but it will not be considered as participating in the management. But if you go beyond that, then you will be, you will find yourself being treated as a general partner with all it entails in terms of liabilities. So one example of those activities that or acts that a limited partner can do without being considered to participate in the management is, for instance, instituting a court case on behalf of the partnership if the general partners have not done so. They are not willing to do so. So you are given that right to be able to institute a court case on behalf of the limited partnership and a number of other acts that limited partners can do. So the limited partnership is the most type that is used by investors, especially if we look at it in the perspective of KIFC, but also other investments. You will find that this is the type that is used mainly in equity, private equity funds, venture capital funds, because it allows to have an entity or an individual with expertise in fund management to become a general partner, but also these individuals with the expertise would be able to attract investors, which can be pension schemes, insurance companies, high net worth people, individuals, to bring in their money, and then they are sure that they are entrusting the management of the money with or the funds with someone with expertise, and then they will be able to get return on their investments. So this is an ideal vehicle for investment funds, whether private equity funds or venture capital funds, because of that possibility of having people with or entities with the expertise and those that are interested in investing only, but investing with a certain level of protection which comes with the limited liability that is granted to limited partners. Other advantages that are associated with it have been mentioned by other panelists, including, among others, the tax transparency treatment that is given to partnerships in general. So in the case of limited partnership, if you are an investor and you enjoy, for instance, tax exemption, then you will be able to invest and what you get as a profit at the end of the day will not be taxed, because it will not be subjected to the tax at the level of the partnership. It will be taxed at the level of the partner, and if as a limited partner you enjoy tax exemption, then you will be able to continue to benefit from the tax exemption, contrary to an instance where you would have invested in a company and then at the company level the income would still be taxed, even if at your level you are exempted from taxation. So I think with those advantages and many others, the flexibility that you have mentioned, if you look at the law the way it is, most of the things are left to the decision of the partners. They are given this latitude to cater for everything in their partnership agreement, but in case they have not done so, then the law has default provisions. So with this flexibility, this contractual flexibility, investors who already enjoy the limited liability as per the law are able also to make sure that other things are tailor-made to their needs, since everything will be subject to the agreement of the partners. Maybe another thing that I need to mention here is that contrary to the general partnership, In a limited partnership, partners will be both individuals and body corporates, that is, entities enjoying the legal personality, which allows the general partner to be an entity that is experienced in fund management, but also limited partners, they can also be entities, as I have mentioned, which is not the possibility in the general partnership. Thank you.
Thank you so much, Richard. I believe that was clear to our audience. It was clear to me. And now we'll move on to Adelit. Adelit, could you please touch a bit on the limited liability partnership and what it entails, and who exactly could benefit from the types of companies or the types of individuals that usually use this limited liability partnership?
Yeah, thank you. As other colleagues, panelists said, so the paperwork to incorporate to get the partnership registered are the same for other type of partnerships. So coming to the limited liability partnership is a business entity with legal personality. So it is the difference between the other two types. So is a business entity with legal personality. So meaning it can own assets in its own name, also or be sued in its own name. Partners in a limited liability partnership also can be individuals or body corporate, so legal entities can be partners in a limited liability partnership. So the partners, they will have rights to share to the benefit or losses of the partnership. In addition to what have been said, so the limited liability partnership under this law must have at least one manager. So is being a legal personality, so it has to have one manager. So looking at the daily activities of the partnership. Also that manager annually will file the status of the insolvency to the Registrar General, also to make sure to know how the business is going. Other thing I think is the same as my colleague said on general principles of partnerships, maybe the liability of partners will go also to the extent on the contribution to the capital of the partnership, so nothing beyond. The partner can be personally liable to the wrongdoing. So if you do frauds, so then you can be personally liable to those wrongdoing. The other thing I think is the panelist, Richard, who have mentioned that, so the conversion, so now a private company can apply to convert to be a limited liability partnership, also general partnership, limited partnership, also can apply to convert to be a limited liability partnership. I think that is what I think. Other activities like normally limited liability partnership also are the vehicles investors like to use, for instance, for private equity. A private equity fund also can use also that vehicle. I think those are the main features I can mention. Thank you.
Thank you so much, Dr. Adelit. And for my own understanding here, so private equity funds can use a limited partnership or a limited liability partnership. What's the advantage of one over the other?
Yeah, thank you. As my colleague Richard, the panel said, so if we use the limited partnership, so you will need to, by this law, to onboard the general partner, also to come into your business, who will be doing the daily management of your business. If then you choose, as we have said this, is this the choice of the investors actually, how they want to structure their businesses. So if they choose to structure their business as a limited liability partnership, so now they will hire a manager. So not necessarily to be one of the business owner. Other things will operate the same.
Okay, thank you so much, Dr. Adelit. I believe that's clear now. I'll move on to you, Marcy. What would you advise business structured as partnerships in regards to compliance to tax procedures? What would your advice be to them?
In one word, please be compliant. But building onto that, we said earlier that we have the draft income tax law being revamped, and there have been a few changes in there to accommodate taxation of partnerships. When it comes to compliance, this is premised in the tax procedures law, yeah? But what the draft law has come in is it's given the Commissioner General of RRA the mandate, such that once the law is passed, then the CG is going to follow through with proper guidelines, advising us. I mean, it's the first time we are being compliant as far as partnership law is concerned. So the CG then is going to follow through and come up with the modalities. Like if there are forms to be filled, he needs to come up with the structures of the form. If there are timelines, what we know for a fact is partners are going to pay tax, right? So what we need then in place is what forms are they going to use, what are the timelines, what's the frequency, can they hire tax consultants, all this is going to be advised much later. And I think the advantage we have working with the Rwanda Revenue Authority, coming from previous experience where we've had maybe changes in law, they're very keen then to sensitize the general public as well as service providers. We've had training. So I would expect even in this case, then there'll be a training. Once the forms are out and the modalities have been laid in place, then there would be an instance where tax service providers are going to have a session, and then you're updated on what is expected. To mean then that when investors are coming in, we already have people on the ground who have the ability and capability to help you with compliance as far as taxes are concerned. So we are leaving the modalities to the CG for now. Yeah.
Thank you so much, Marcy. Now, I've seen some questions come in, but before we open the floor to audience questions, I don't know if any panelist has a question for another panelist. I know you've come in with different experiences, different expertise. So if there's a question that you'd like to ask any of the panelists, this is the time. No questions? All right, thank you so much. Thank you so much. We're now going to open the floor to our audience. Please, if you haven't had a chance to type in your questions, please send them in, but we'll start answering the ones that have been coming in at this time. So the first question is from Wallace, and it says, "Good morning to all the panelists, and thank you for all that science and intelligence. I would like to know what will happen if general partners and limited partners want to dissolve their partnership." I am going to ask two people to touch on this. Julien, if you can get us started with an answer to this gentleman. And then I would like you, Richard, to touch on it as well.
Thank you. So it's a matter of dissolving the partnership. That's one of the flexibility we've been talking about compared to the Companies Act, the current Companies Act, that in the partnership it's you deciding at the beginning of your relationship the way you will be dissolving, the way you will be separating, the exit strategy. But if it is a general partnership and you only two, and you decide to, one of those two individuals decide to stop, it means that the general partnership is coming to an end, because you need minimum to be two people. So that is by law, but even when drafting the relationship in the agreement between partners, you will be deciding yourself the way you want it to be, your separation to happen. It's like a couple, you in a wedding contract, and then you decide the separation agreement, who will be taking what, how you calculate what is going to who, and that is the flexibility. You in the driving seat even for the exit. So you may not be ending to go to, going to court because everything is set in your partnership agreement. So legal advisors can be helping you to do that, and it's something you have to decide at the beginning. It's like, as I was making a comparison of the wedding, it's having a wedding contract, so you decide it at the beginning, what happened if we are not in agreement, or it can also be decided that this is a project for a term. If it is for 3 years and then it comes to an end, after that period you can renew or decide that the term is enough and you dissolve. And the terms and the modalities, you the one deciding on that. So the law has been giving more flexibility. When the Companies Act is usually mandatory, they're saying you do this. If you don't do this, you're not compliant, as Marcy was saying. In this partnership law, it's very flexible, it's very engaging. You the one deciding. What do you want for your partnership? Because you know better than anybody else what you're doing and for how long, and dissolving it, it's you deciding. You plan for it.
Perfect. Thank you so much, Julien. I believe that's clear. I don't know if, Richard, you'd have anything to add to that?
Yeah, thank you. I guess Julien has indeed tackled it appropriately, and I liked how he compared it to a marriage relationship. And actually, in some jurisdictions, they call some of these marriage relationships civil partnerships. So I think the comparison was on the point. So basically, as he said, everything has to be catered for in the partnership agreement. This goes into the other perspective of the flexibility that we have alluded to several times, that most of matters, aspects are left to the decision of the partners themselves. Maybe what I would add is that in case maybe partners have omitted to cater for something, then there are default provisions in the law that would apply. With that, maybe I can only add that procedurally, all they will need is to lodge a notice of dissolution to the Registrar General, so that the public is alerted that a given partnership has decided to dissolve or has come to an end, and it is ending, so that the public is notified. So there is also that flexibility of allowing them to decide, but once they have decided, then they lodge a notice with the Registrar General, so that the Registrar General also notifies the general public that X partnership is dissolving, so that if they have any claim to raise, they can raise it, and then after that, the partnership would be dissolved. But like for the general partnership, for instance, even if it is dissolved, then the liability would continue with regard to the general partners, which also has an impact on the dissolution. Normally for companies, you cannot dissolve it if these issues of liability are not cleared, but for partnership, it can go ahead and you can go ahead and have it dissolved, as long as partners would still have this liability. Yeah, that's what I wanted to add.
Perfect. Thank you so much, Richard and Julien, for that extensive answer. Wallace, I hope this answers your question, but please, if there's anything else that you would like clarification on, just keep typing the questions in the chat box. So the second question that we have here is, did the law provide sanctions or responsibilities in the case one of the general partners or limited partners violate the agreement or act in their own interest? I believe Julien and Richard touched a bit on that, but I would like you, Adelite, to expand a bit on that.
Yeah, thank you, Liz. So the partnership law, it is true, we had the provisions catering for sanction for partners who violated what they agreed on. As we said at the beginning, so before the partnership or business starts, so they have to do the partnership agreement. So they agree on how to undertake the partnership business. So this law, it has provisions whoever violate, so what they agreed on. So remember, I think I gave an example. So in a partnership, limited liability partnership, normally the general principle, so the partners are liable, for instance, to the extent of the contribution to the share capital of the limited partnership. However, if you are in wrongdoing, in fraud, so there are clear provisions in this law which actually will provide sanctions for those.
Thank you so much, Adelit. I believe that answers the question that's been asked. Our next question is from Robert. He says, magnificent conversation. So thank you to our panelists. This is a concrete way of attracting additional capital and private funding for investments in Rwanda. There'll be no difference with their current jurisdiction. Thank you so much, Robert, for sharing that comment with us. And the next question is from Eric. Eric, I believe he directed his question specifically to Marcy. What is the timeline of the updated, revised income tax law? If you could please share more details with Eric.
That's a good one, Eric. I plead the fifth. I can't be committing the government on this one, but what I can say, there's a very keen interest in growing and developing Kigali International Financial Centre, right? So then I would expect that the government has a very keen interest in making sure that this law is passed at the soonest possible. So I cannot commit on any timelines, but let's work with soonest possible.
Thank you so much, Mercy, for that answer. Yeah, but so Eric, it's coming up as soon as possible. I believe Eric has also a follow-up, saying the implementation modalities are left with the CG, as I understand. Would there be room for other stakeholders / business community to play in advocating for efficiency? That is also going to go to you, Mercy.
That's a very good question. If we can go with previous experience, and I'll give a specific example, like when we had the annexure for transfer pricing coming up, we had the government literally calling in taxpayers to a forum, and even service providers to a forum, and explaining, we have this in place. How neater can we make it? Is it understandable? Does it look efficient for you? Is it going to give you too much extra unnecessary administrative work? So I'd expect even in this case, then there should be leeway at some point for the government to have these discussions. And by government here, we're talking about the RRA being the arm of government that's responsible for this. So yes, there would be that expectation that the CG would involve other stakeholders when it comes to tightening a few bolts here and there as far as efficiency and compliance is concerned. Yeah.
Thank you so much, Marcy. I hope that's clear to you, Eric. Our next question says, it's from Michelle, will all the partnership structures be pass-through entities? And here I am going to guess that Richard wants to take a stab at it.
Thank you, Michelle, for that question. As you might have heard throughout this conversation, tax matters or tax aspects are still under discussion, but the ideal and different proposals that have been received to consider all partnerships, all types of partnerships as pass-through entities, but this is still a matter that is being discussed. Conversations are ongoing on this, and they are yet to be concluded, and they will be reflected into the revised income tax law. But what I would say is that we've received a number of proposals from different people that all the three types be subjected to the same regime. But it's something that is still being discussed.
Thank you so much, Richard, for providing that insight. Our next question is from Vivian. Hashtag Invest in Rwanda. Soon, Rwanda will be able to register partnerships online. Existing private companies will be able to convert to partnership. Right? I believe this is more of a comment. It says this and more interesting points from RDB. And that comment is directed to you, specifically Richard, as the Registrar General. So thank you very much, Vivian, for that comment and following along on this webinar. All right, this webinar. We're moving to the end of our webinar. I hope that this was valuable, that you understood the basics of this partnership law, why is it important, who can benefit from it, the different types of partnerships, the taxation of these partnerships, and really how this is bringing us up to play on a global scale as an international financial center. So I hope this was valuable for you. Thank you so much to our wonderful panelists for the dynamic discussion. Thank you to our engaging audience with the questions. If there's still something that's unclear or something more that you would like to learn about the partnership law, you can go to our website, Rwanda Finance Limited. So it's rfl.rw. There's usually some contact us information. And if you reach out either via like the phone number or the email, we are more than happy to respond to your questions, offer guidance, and really provide any necessary information. So thank you so much for being here with us today, for investing your time with us. This is the end of today's webinar, and we hope to see you on the next one. Thank you.